Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone sliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had what seems like a routine week, driving upward relentlessly to new highs. Monday was up right out of the gate as the U.S. and China agreed to 6-month meetings to review their economic policies and, of course, trade situation. There were also short squeezes in Tesla and beyond, and that was a sight to behold, and that did help the market move up. Later on in the week, those stocks, which just soared to the upside, Tesla and beyond, did pull back. As analysts came out and said, well, enough is enough. Tuesday and Wednesday, the market did chop, at least till early on Wednesday morning, waiting for the signing of the Phase 1 trade deal, of which the president made a giant spectacle, as it was for him an opportunity to show one of his great accomplishments. At best, it's a truce, and even his own administration says it's unenforceable. And there is a lot of commentary coming out that, well, the trade deal Phase 2 is not likely to come until after the 2020 election, and who knows if anything is going to come after that, as China is probably not going to give a whole lot more ground after having made this nothing deal. Thursday, we saw the markets pretty much ignore the start of impeachment. And in the last hour, it just absolutely soared to the upside as the shorts were just choking. And it's obvious that you just can't sell anything here. And every time you do, towards the end, anybody who sold anything towards the end of the day, they're just coming in and buying it back. So we're getting these strong closes every single day, as nobody can stand the thought of another gap opening to the upside, which we've been seeing most days. So Thursday, that strong close, and then Friday, the Asian markets turned up on China, showing the slowest growth in 27 years. Maybe it was a slight uptick from what the estimates were, but the Chinese markets did start to move up. And we do believe that the European and Asian and world markets as a whole are going to well overperform the U.S. from this point forward. And if you want to see more about that, please watch our video that we did Thursday, where we show you the country ETFs and compare that to the United States. And I think you're going to see where the best investment opportunities are for the longer term. So make sure you do watch that video. Everything that we see in the stock market shows that it doesn't, investors don't really care about anything, any of the news. None of that matters. The only thing that really matters is the flow of money. And we like to show that in our own charts that we look at. And I'm going to show you a chart that I think is of great value. We're going to look at a weekly chart in the S&P 500, and see what chart I have up here. Well, that's not it. That's the bond. So we're going to go to SPY, and what I want you to see is the weekly chart. Let me get over to weekly, and you can see that right there. And this is an extremely interesting chart when you look at it. This is the spiders, SPY. That's the S&P 500 ETF. On a cycle chart. Now, cycles are the rhythms or the heartbeat of the market. And what I'm looking in here is going back into 2017, late 2017 there, and to show you these rhythms in the market. Now, cycle analysis is measured from low to low. Every cycle is measured from low to low, and there's an average distance. And in this case, there's a dominant cycle that we see right here, and then a minor cycle made up of two pieces right in here, 1, 2. The second piece in here, almost not obvious at all because there was no downticks whatsoever, and immense strength in this move right over here. And this is our momentum indicator, and you could see as it just continues to trek upward. But that's not the point I really want to make here. What I want to make is flow of money and how there is an ebb and flow in the market that is very consistent. And I've been talking about the market peaking sometime in late January to early February, and then a decline into March. And I want to show you the detail of where that really comes from. So what I have in here, you'll notice these blue numbers. Those are the number of weeks of advance off of the cycle bottom. So in other words, this cycle, this dominant cycle moving up, moved up 17 weeks, as you can see right there, and then corrected down over here into this cycle bottom. We call it nested, with two cycles making that bottom in there. So that rallied 17 weeks and then corrected about 4 weeks. And this is about an average of about 20, 21, 22 weeks in each of these cycles. So this is what's important. We're going to look at the number of weeks to each cycle peak, and then the percentage of declines in the corrections. Now, when you have severe corrections, they peak early. As you could see, this cycle peaked after only 12 weeks of advance. And you could see this was a 19-week peak way over here. 16, 12 weeks, 17 weeks, 16 weeks. And this advance so far is 15 weeks. You can see that right there. So nothing that extraordinary when you look at it. A 15-week rally without basically a downtick. This one, a 17-week rally without basically a downtick. You had one little down week there and one little down week here that couldn't even stay down. You could see that, and it kind of made the middle cycle. So what we're looking at now is the coming correction. Now, why would I be so confident about a coming correction? Well, each one of these, as it shows in these yellow corrective zones, had declines. So it made a 19-week peak, it fell for a few weeks, 12% was that decline. This one, a very modest 4.2% after a 16-week peak. This was a huge 23% drop. That was a mini bear market that occurred there as we got that low in 2018 with the big decline in December. This one, a 6.7% decline there, a 6% decline right over here, and each of these making these final 3-4 weeks that you could see right over here in these corrective phases. We have not yet entered the corrective phase in this one, and that is coming very soon. So we highly expect that there will be a correction. The estimate is 5 to 6% decline into March, based on this extremely consistent ebb and flow of the market. That is the rhythms of the market. And you could see we're still in a strong upward trend right in here. And that won't change with just this modest 5 to 6% drop. We're really targeting somewhere around 1313 there in the SPY. That would, be somewhat over a 5% decline. When you get there, it could get to the next support zone a little bit deeper down there, and that would probably take it down to around somewhere around 305, and that would be maybe a 7% or 8% drop. So we're expecting that kind of a decline and then a rally back, and then actually we're looking for a bigger decline out into June in that next declining phase, which is not on the chart right now. But right now we're focused right here, and that ebb and flow in the market suggests that somewhere right in here in the next 1 or 2 weeks there's going to be a peak, and that it will decline here into March. Right there, it may be late February, it might be mid-March, depending on how the variance changes in there. And you can see this was a 16-week high and an 18-week low, so it doesn't have to be quite as long within that normal variance. And also important to note that every one of these cycles, every single one, hits the 34-week simple moving average. which right now you can see rising pretty sharply and coming up into this time frame right at about the same place. So somewhere between 1313, 1305 is the likelihood of a pretty good decline in the SPY. 5, 6, 7% is what we expect to happen. So I hope that was really clear to you. You get a good sense for cycle analysis. You can learn about cycle analysis by going to askSlim.com and go to the cycle analysis workshop page, and there's a little informational video in there about our workshop, and I think you'll find it interesting. So you get a very, very good sense about what we're expecting in the market. Coming up here, just a correction in the area of 5, 6, maybe 7% between now and March. And if you think that's crazy based on the tape action you see, well, you can see it's just the normal movements in the market. Even in the context of a Super Bowl like we are right now, coming into 11 years, you still have those moves down, and you see even 23% was the size. So 5, 6%, that's nothing, and it's a very, very likely we're going to see something like that. For the week, the stocks, well, they're up between 1.5% and 2.5%. The Russell's the biggest of the gainers. The bond market, 30 years, down about 0.5 point, with the 10 years only up about 1 or 2 basis points. Gold market up a couple bucks for the week. It was a very narrow week for the gold market. And that's actually a pretty good performance, being that the dollar gained on the week about 0.3%. It has improved some, the dollar, and there's no breakout in there. And I'll talk a little bit more about that in the short-term view. And the oil market, well, that just sloshed around in a very narrow range, losing about 60 cents on the week. And make sure that you follow me on Twitter at askSlim. We're putting up a ton of things on Twitter now with some great analysis, and you could see that analysis also in our blog on the front page of the website. And become a YouTube subscriber if you like this video. And how could you not, after me sharing that just great analysis on the SPY? Well, make sure you give me a thumbs up in that video. We're going to switch now. A thumbs up for this video. We're going to switch now. We're going to look over at the best and the worst stocks for the week. And what we do is we kind of pick out some of the stocks that had good moves and maybe have some interesting patterns. And I'll show you 5 of each of those, 5 of the best and 5 of the worst stocks for the week. So we're going to move into the best stocks, which were solar stocks. And interestingly, one of the worst stocks is a solar stock. So they were all over the place. And SunPower gains 14%, and VSLR gains also 12%. But let's move off of this SPY to SPWR, SunPower. Now, you can see in here, SunPower, again, cyclical analysis, very clear. A low due right in this time frame, and it came. A rally due in this time frame, and it came. And the resistance zones right over here. This is a horrible pattern. It looked like it was great. There was a massive buying going on, and then the sellers just cut this thing in half or worse. This is the resistance here between 9 and the low 10s right there, and I really think that's a sell area for the stock. So no news in the solar stocks. It just gets that pop up right over there. And the best gainer in my 300 plus stocks that I look at on a regular basis. VSLR is Vivint Solar. This one also a stock that loses money. So SunPower loses money, VSLR loses money. Maybe they're real excited because it's scheduled to lose less money for this year at 29 cents. So the stock, of course, very expensive. And if it gets all the way up to, let's say, making 20 cents, then it would be a 50 PE or so. So it would be a miracle to have this thing make any sense price-wise. It looks like it wants to test that area near 10 and then come back down. And it's coming up so late in this pattern right over here that it's not really that bad. It's a better pattern, much better actually than what we saw in SunPower, but I'm not excited about any of those. Now, Etsy, which is maybe some of you buy on Etsy, it's a online retail stock. This stock gets a bounce, I think, benefiting from the action on Amazon and Google. and it's a sell in my opinion. Now, what makes it a sell? Well, what I want you to see is what we call configuration and cycle analysis that is amazing. So what I'm going to do is I'm going to I'm going to add some things to this chart so that you can see. So what I want to do is I want to show you, this is what we call a positive or bullish configuration. It closes higher than it began, and I'm just going to change this arrow so that you can see. It's a nice green arrow going up, and this cycle was positive. You could see the clarity in that. And I'm going to show you right in here, this positive cycle right there as it makes a higher high. So you notice it moving up that 34-week moving average, and you can see that it establishes the uptrend, which continues right over there, and then it continues right over here. Now something happened after that, and you can see 4 perfectly positive cycles in there, all giving you the uptrend, all getting support at the 34-week moving average. But then something changed, and what happened was that there was a break, and there was a break below this cycle low right over here, and when it did that, it now establishes what we call negatively configured cycles. So I'm just going to grab this and I'm going to move it over right over here, and we'll just make it red because it's very clearly red right there. And you can see that it's a red cycle moving down. So what happened when you got that red cycle moving down? Well, the cycles are what make chart patterns. So this cycle made a left shoulder, this cycle made a head. It then broke the neckline right over here, and you had a completed head and shoulders. You can see how 1, 2, and 3 cycles made that head and shoulders top. This is in our cycle analysis workshop where we talk more about that. And then you could see the neckline basically right around here, and you can just see that the distance from the head to the neckline shows you the projection for the head and shoulders top, which was to get down below this level here, which it did. And then you had another look at a negatively configured cycle. Negatively configured cycles often resist the resistance areas in here. In other words, the retracement levels. You could see it hit the sell zone and move down. Look where we are right now, coming up to the sell zone. So when you see that, the odds are pretty good that this next cycle is going to have another pretty good decline. Now, if it doesn't take out this low, this important level right over here, then it's going to be changing to positive again. But right now, the odds are pretty high. It's going to come down and test this. So when you look at Etsy, and I said it's been dragged up basically with no real news in here, I think it's a sell. 10% gain on the week into this sell zone, just like it did right here, and I think it's going to come back down and potentially test that 40 level or lower again. So I wanted to share that analysis with you, that the odds are pretty good that you're going to end up with another negatively configured cycle in here, but if it doesn't, it's going to give you information, important information. And you can see how the cycles made that head and shoulders. You could see how it hit the target. You can see how the 34-week moving average gave it support, and then it broke down through it, and then it became resistance, and then move down again. How perfect is that? I hope you learned something looking at that, because I always want to do some great teaching when I do these shows, and then you can see the benefit of being an askSlim member. And I'm going to tell you more about that in just a moment on a special that we have for our level 2 members. Take a look at Morgan Stanley right over here. Wow, what a move. Now, this was the best of the financials. Some of the financials broke, and the 2 worst stocks for the week I'm going to show you are financials. But look at Morgan Stanley, a really big beat, and the analysts love it as the stock moves up. Now, this shows you clearly the cycle patterns. The blue is the XLF, and you could see how it follows the XLF very nicely, and the minor cycles in there, and then this cycle just taking off. Here's your resistance at that major peak right around the 59 or 60 area, and it sure does look like it's going to go there. Any pullback in there would probably get you new highs over the 60 level. So if you get a pullback into that March area that we talked about, now note, we talked about a pullback in March in the stock market. Well, it lines up the same thing here in Morgan Stanley. That, you see, would be a buying opportunity, a high quality long side entry. And if you're patient, you're probably going to get that coming in March. So good pattern there, 9% gain on the week in Morgan Stanley. And the last one on the positive side that we're going to look at is TOL, T-O-L, and you can see it hits the target zone. Look at the cyclical patterns. They just scream at you, don't they? Of course, if you get our charts, you're going to be able to request cycle analysis on the stocks that you're interested in, and we share our cycle analysis on 84 of the best traded symbols, unless you ask for more as a level 4 member. So hits our target zone right over here, probably going to get up towards the top of that upward channel, and you can see the uptrend in there very clearly. We call this the directional component in here that plays on what would be ideal cycles on the bottom. And then what it does is it pushes the cycles in an upward pattern, configures them positively, and then it hits the target zones, which are just beautiful. So gets up there to our target, probably going to see it around 46 bucks, and then probably get some kind of a pullback. And this one points actually to April for its corrective period there. So you're probably going to get a better opportunity to buy TOL. Maybe there's a couple point upside potential. Maybe there's 2-3 points downside potential. So kind of a corrective choppy period we're coming into right now. And that is a look at TOL. So that's the best 5 stocks I'm going to show you. And man, where are you going to get lessons better than that about charting? I just don't know. Let's take a look as we look at the weakest stocks or the worst patterns for the week, and we'll go from TOL to BK. This is Bank of New York Mellon. Look at that failure from the 61.8% fib. Notice this cycle right over here. That made a diamond. See the diamond pattern right there? That happens when the middle minor cycle gets lower than it eventually bottoms at. So that's how the diamond is formed based on the cyclic action, and then it breaks out and gets into the rising phase, fails at the 61.8, and it has this big decline. Earnings beat, revenues missed by a lot, analysts all over it, downgrading the stock. You can see the support zone here. There's going to be another little lower support right around 43. So we think the stock's going to fall down between about 40, below 45, maybe down below 44, and then begin to rise again. But there is a gap in here on the daily chart, and that is why we have this negative projection right over here. And the likelihood that this is going to get lower. So we're going to project the bounce to be not very good looking at Bank of New York after it makes its, yes, March low. You can see the alignment in there. Wells Fargo is a company in crisis. We've said that many times, but it has improved. Now again, we have a situation where you have this big gap that's right in here on the daily chart, and the likelihood that it is going to continue to move down here into March, just like the rest of the market. Here's your lower support zone. We're going to target it around 46, but it got above that level. You can see that right there. And because it did that, we believe this low will not be taken out, and the stock will begin to heal itself sometime later in the spring or summer, and begin to maybe get past all of this problems in here. They had continued high litigation costs with all of their mess around their accounts, analysts downgrading the stock, and that's why it gets this break. We actually think that it is buyable under the 46 level, but not quite yet when we see that. Next stock we're going to look at is Alcoa, which is AA. Alcoa is moving down right now, and they had a bigger loss than estimated. The company gave some favorable comments. Now, Deutsche Bank upgraded it here on Friday. The stock still hasn't been able to pick up. Now, you'll notice this has got a lot of colors in it. I haven't shown you one of these yet today. And that's because what I want to do is show our subscribers that there are colored phases. In other words, a rising phase, a corrective phase, and a negative phase. The negative phase comes when it had a significant breakdown and moves down like this right over here. and now it's turned down right here in Alcoa. And this, in our opinion, is very late. Here's your DBB, that's the base metals right there. And we're seeing great action out of BHP, Rio, Vale is ticking up. And this is moving down, and we think Alcoa is going to catch up, and this is a base being built in here on this cycle, and that it will turn up and surpass this level of 23 or 24 coming out here soon. So this bottoming period right in here, it might extend for another couple of weeks, but we think that the stock is going to be in good shape. Now, if it breaks 1646, our upside objective will be reduced. Because it will not have completed a base, and we'll be looking for the next cycle to do that. So we would still be looking for a rally from somewhere 17 to maybe 21, and a bottom soon to form when we look in there in Alcoa. So down 7% on the week, bigger loss, and we think it's a good stock. So we would go after that one in the next couple of weeks for a rebound. Okay, so I said good stock. Well, it might be a good trade. Let's put it that way. Target TGT moves down this week. It's down about 6% on the week. Disappointing holiday sales would broke this stock. Now, we thought it was going to get up to that target zone right over here, over 133. Except now you can see this evening star pattern in there that's forming that top. And also fails at this extension right here. That really says to us that the top is in place, and it has this downward week. Now we're wondering if it's going to test this 34-week moving average, which it seems to do in almost every cycle, coming up like right over here under 110. This decline, as you can see, pretty much like the rest of the market, is pointing down to at some period in March. It's too soon to buy this stock. Let's just target it under target under 110 as a better opportunity if you're interested in buying it. If it would rally back in the next week or two, I think it's a short for aggressive traders. And the last stock, which is First Solar, which moved opposite the rest of the group that we showed you, moves to the downside here. Barclays downgraded the stock. Again, here we have a clear look at what is a, just going to duplicate this so you can see, a negatively configured cycle right in here, which suggests that the next cycle will fail in the resistant sell zone, and you could see it doing that. If it gets under this level around 50.25, it's likely to hit that fib extension near 44 that we have in there as a target for us. We're going to call the stock very risky with a potential loss of another 18-20% between now and this low around the end of March, beginning of April. You can see the beautiful rhythmic action in here. Probably this first minor cycle getting ready to bottom. You'd probably get some minor rally in here, and then wham to the downside. So we don't like this stock, neither does Barclays, and we think it failed beautifully from the sell zone to prove that the stock has a lot of trouble. And that is a look at First Solar, a stock that looks to us like it's got trouble. And again, we said those other solar stocks look to us like they also are getting up to areas where they probably don't have a lot more upside. So Solar Group, not looking great. I want to like that group. I really do, as I think that alternative energies are going to be in vogue again before you know it. And of course, depending on who wins this election, might make a big difference in that. I won't make a political comment, though I have to bite my tongue. So that is it for the best and the worst stocks for the week. So you've seen the kind of analysis that we do here. And before I get to the short-term view for the coming week, don't speed ahead. Do watch this, because I've got some great things to show you in here, especially if you're an index trader, or if you're a trader, or if you're an investor. I can't think of a category of anybody who engages in the markets that I wouldn't be interested in our on our level 2 membership. And we have a trial running right now. For those of you that have not tried our analysis yet, have not received the content that we produce, we have a big team producing amazing content right now, all of course off of my core analysis that we that I brought to the rest of the team, and now they are developing some great things from it. Level 2 members, that trial includes our stock index report and the live stream. So what we do every day is we put out a report on the 3 major indexes, the S&P 500, the NASDAQ, and the Russell for short-term traders, day traders. We give you supports, resistances, acceleration zones, and the reversal scout. It's all about applying the way that you trade with the market to the analysis that we share. And it's just great information. What it looks like is this. So this is a picture of our live stream, which I just took maybe about an hour ago. And it shows you the kind of information we have in here, the important support zones, the acceleration zones. In other words, if it gets there, it's likely to move down through, and that's how you capture the big trade. That's where you add on to positions and be able to maximize your winner. We have the resistant zones, and when they're blue, aqua or blue like this, that's because they're based on extensions. We're at new highs in the market, so we have to calculate it based on the extensions, and you can see how great they are. Look what the NASDAQ did right here. It nailed it and then turned right down. The same thing for the Russell right here. Nailed it and turned down. And you can see the strength and weaknesses. You can see the S&P 500, the reversal scout, not showing you a reversal and moving up still. That brought that rally right there, as you can see. And now look right here as we had the downward turn in the Russell, and you get clarity here that the Russell today is the weakest index. And if you were a pair trader, you would buy the strongest index and short the weakest index if you wanted to do that. Or if you were a buyer, you would want to buy the stronger one. If you're a short seller, you want to short the weaker one. I mean, it's just the way it works. And great information here. Support levels, resistance levels, places you think they're going to accelerate. I mean, I just can't see how anybody couldn't benefit from this if you're a short-term trader. So please do. And I'm going to show you how you can benefit further from our level 2 membership. The trial includes everything that we have on level 2. You're going to get our stock index report daily. You're going to get the stock index report live stream. We'll send you that every morning. You don't need a special platform. No matter what platform you trade on, you'll still be able to see that. You'll get nearly 500 videos that I have recorded for traders and investors. It's trader psychology. It's analyzing stock sectors. It's looking at the big picture analysis of major markets. There is so much in here that you will learn. It's incredible. So just binge watch it. If you want to take our trial and not continue after that, you're going to get our Future Speak and Market Week Minutes, where you could go right to the exact spot on the videos and our notes that we have on each symbol. And you're going to get everything in level 1. That's the weekly report on the stock index, which shows you our charts. Weekly and daily charts on the indexes that our level 4 members, level 3 members get to see. And you're going to get our ETF review on the best traded ETFs, the most important ones. And coming very soon now is the momentum tracker for investors. We're going to look at momentum on over 1,000 stocks. And you're going to be able to see the key stocks that you're interested in and what the condition is of them. You're going to know whether they're in good momentum conditions, in corrective momentum conditions, or in conditions that are subject to decline. So really great for investors. That is coming very soon, and we're going to begin a next round of beta testing on that. Coming up really soon. That great level 2 trial, you can have that, and all you have to do is write to Matt for our special links, matt@askSlim.com. You're going to get everything in level 1 and in level 2 that I just showed you. Try it for 14 days for just $14, or for 3 months for $74.25. Big discounts there. And you'll be able to get all of what I just said for that's like no money. I mean, this is less money than you probably spend on coffee this week. So a great look at just the fantastic content that we have. And write Matt@askSlim.com for these trial links. And that's for for new members signing up. And if you're one of our free members, you can also write to Matt, and he will send you these links, and you can get this peek at level 1 and level 2. So yeah, you become a free member and just get our notices and things that we send to free people too. So go to askSlim.com and get benefit from this amazing information. That's it for this promotion that I'm bringing you, and those of you that watched it, I'm thankful to you, and I know you'll be thankful getting this great information. Matt at askSlim.com. Matt's doing a great job, as is Arvi and the rest of the team. All right, so now we're going to switch over here. We're going to leave First Solar, and we're going to move over to the light crude market /CL. And we're going to go, that's a look at our side-by-side chart that you see right there, weekly on the left, daily on the right with our projections. And we're going to focus on the chart in here on a light crude on the daily. The accounting for the week, we're not going to get a lot of credit on the stock market. And the reason for that is even though we talked about it going up, we talked about the strong upward momentum and that it was likely to continue, it went higher through the levels. So we're going to ding ourselves for that because we thought it would stop somewhere between 3302, 3306, something like that. But the S&P 500 moved up through it. And the light crude market, we get a small little ding on it because it didn't bounce quite as much as we thought that it would. So let's take a look here. Remember, we're looking at the sum of the evidence, and I'm going to take into consideration what I see in the intermediate patterns that you don't see here as I look out 1 to 3 weeks. In each of these, and we'll call that our short-term view, 1 to 3 weeks. So we thought that light crude was weak. We thought that the sum of the evidence showed it had made a big top and that we wanted to sell bounces, and you barely could get a bounce. We're going to call this week very similar. Some of the evidence is that there is a big top, and we want to sell bounces. Now, we think that the break is going to take it now, this break, as it skids down on the negative momentum that it just has taken on, down towards this intermediate support zone. This comes from the weekly chart. Note the 89-day moving average coming across right here. That's probably going to give it support. Also, we're going to look for it to get below 57.40. That's about $1 down from where it is right now on this weaker momentum and on this cycle coming down right over here. And then probably a bounce into that sell zone coming out in a few weeks. So we're going to look for kind of a week down and then a week or two on the upside, and then moving to the downside again as we look out for 3 weeks. Now we're going to move over to the gold market /GC. You know, I did our future speak this week, and I skipped right over the metals. And man, did I get emails from people because there's so much interest in it, especially since we had called the big upside move, and people are chomping at the bit to buy again. Now, you can see here, it's in the buy zone right here, and we thought the sum of the evidence was it was correcting in an uptrend, and that there's a long trade coming. And that's exactly what we're saying right now. We think that there's going to be an upside move. The sum of the evidence suggests it's going to move up for a couple of weeks and get up into that high 1500s area up there, maybe approaching the 1600 level. That 1613 was that crazy overnight high based on Iran, and then it got into this correction. But you can see time-wise, a bottom is getting ready to be made in here. So you might get one more dip. This might be a little bit of a bear flag forming in there. So you might get one more shot down over here, or it might just go straight up. I just don't know which is correct. My gut tells me that this is kind of incomplete. You might get one more dip here towards that 1536 number, and then begin to move up. Buy zone, again, some of the evidence suggests minor decline and then an upside move again as the intermediate trend continues up and momentum continues strong. I want you to note the projection oscillator right over here is oversold and getting ready to turn up, and that would be a buy signal in here. So pretty soon we think that the odds favor an up move that could last for a couple weeks. That is a look at the gold market. The dollar market, $DXY, it followed what we thought was going to happen, and it gets me a little confused when I look at the intermediate pattern. Now, we talked about a range, and you see the range right in here. That's the top of the range right there, up around 97.80, the bottom of the range here around 96.35, and we kind of still think it's in a range. We're going to look for a little bit of a dip right in here. That might help the gold market, which is not breaking on that big upside day, and then trying to get upside again. Really, the sum of the evidence says it's a breakdown on the intermediate pattern, and that the odds favor that there's not a lot of upside. Now, if we get over this top of the range, that will change, and it will make us. It'll cause us to shift patterns in the intermediate charts. And for those of you that are subscribers, you will see that when that comes. So over that 97.80 area is pretty key on the intermediate patterns. We'll look for a move down that isn't very much. You can see momentum in here, choppy neutral. Nothing really of good information right there, but it's slightly improved. And we'll just look for it to be really still stuck in that range that we see there. And watching that key level around 97.80, which isn't that far away, as you can see. So that is a look at the dollar. And the next thing we're going to look at in here is the bond market, /ZB. I've been bearish on the bond market, looking for a decline. You can see that head and shoulders in there that's forming pretty nicely. That's going to call for a move down. We're looking for a significant move to the downside. And that is the downward projections are headed down to about 155. We said last week that some of the evidence was that it was in a downtrend and upticks would fail, and all the way into early February. That has not changed. That is still the sum of the evidence, and you could see as it got into the sell zone and then moved down. I got some emails as this was moving up that said, well, wait a minute, other analysts are saying that the bonds are bullish, and I'm, what makes you right? Well, I don't have to be right. I could be wrong, but I just, look at the sum of the evidence and bring you what is the highest probability. The highest probability was because of this pattern right in here, where it tested this low and actually broke it by a little bit here, that this sell zone would stop it and it would move down again. Our target 155 in the next few weeks. So the sum of the evidence continues to suggest lower prices in bonds or higher yields in the interest rate market. Now, if for people that are interested in the longer term in interest rates, our big picture analysis that we did of the bond market has not changed. And you're going to want to go look at that because it says something very different after we get past this period of decline or downward correction in the bond market. We think something very serious is going to happen, and you can go look at that. And we're going to update that in the next few weeks also. So once we get some clarity on this shorter term picture, that is a look at the bonds, and we think that the bonds are going to continue down. And that upside moves might come, especially if the stock market ticks down, but we think that they will fail and that the bond market will continue to move to the downside. So the stock market, we said the sum of the evidence was that everything was powerful. There was not anything that gave us any sign of a downtick in here, and we could barely get a downtick. Look at these cycles, every one of them ticking to the upside, just super powerful as you look at that. And let's just look at these last couple right over here, and you could see the minor cycles have given almost no decline, like right in here, extreme swamping. You pretty much have that right in here. Now, I said last week that I thought it would dip, maybe get down to the 3260 level, and there's no dip. I mean, there's just this upward momentum just does not stop. You can see the buy here that occurred right there on the projection oscillator. You can see the one right over here, the signs of strength in the projection oscillator. And any downtick in here is going to give you an instant move to the upside again. So we're looking for this week to just give you a little bit minor dip in there. 3,300 to 3283 is where those support zones are right there, and they are rising still. I had to send an update to our subscribers again today because we kept getting higher prices. Powerful upside momentum, everything about this apparently strong as we look at these. And again, we had to put in some higher numbers right over here as it gets up to the 61.8% right there, and a little higher fib projection right over here off of some lower cycles, which is at 3362. There's a area around 32 to 3350 on the intermediate chart that falls kind of right in the middle right over here. It doesn't really matter. I mean, the market goes through every single one of these, and until it fails at one, you don't really have a sense for good anchor points, good tops. I mean, everything I'm doing here is just looking at some of the evidence and telling you they're still going up, and projecting normal cyclical action, which is not happening. So we're looking again for that period right in here. That's into February to begin that decline I showed you in the show in the spiders. In the S&P 500, the first wave down here into February, then there'll be another rally, and then the decline into March in this cycle that you really can't see here. That's the big corrective cycle that we're looking at. So right now we're just going to continue to look for the market to resist the downside in any significant way until it tells us differently. Some of the evidence, all indicators very positive, minor declines, and then testing higher highs, and then sometime a big drop of 4 to 6%, we believe, is a very good likelihood into March once this top gets set. And so far, you can see no sign of it whatsoever. That is the short-term view, and I hope that you have really liked everything. Don't forget to write Matt at askSlim.com, and we have just shown you our 5 major markets and the short-term picture. Hope you've loved it all. Hope you sign up and take one of our trials. If you're already a level 1 or 2 member and you want to try level 3 for the amazing Slimulator, or to get our charts on your Thinkorswim platform, you become a level 4 member. The depth of our information just blows me away every single day when I look at it, as our team is doing such a great job in bringing great things to you for very reasonable prices. So please do become an askSlim member. I'm excited for the great information that we bring you, and excited that you're here to this moment at the end of the show. I want you to be so careful because it's so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been